Hello, I'm with Simon Chisholm, Chief Investment Officer at Resonance at the Investing with Impact Summit. Simon, can you tell us a bit about Resonance and about your expertise in this area?
Sure. Resonance is a social impact investment company. We focus on impact investment in the UK. We've done that for the last 16 years. And our approach really is to identify the most effective forms of social enterprise, what are their capital needs, and what are the right kind of funds to supply that. So that's led us into a wide range of different fund management activity, particularly around property, which is what we're here talking about today.
Right. Thanks, Simon. I was going to ask as my next question what your kind of expertise is within impact investing, but you've just mentioned property, so presumably some property is the area that you're...
So yes, that's our focus today. We also run some funds that focus on growth capital for social enterprises, and also some that invest into community asset projects. But property has been a massive theme of what we've done because there are so many ways in which property assets, particularly residential property, can be used by social sector organisations to create impact, but also generate really good returns for investors.
Thank you, Simon. Why should pension funds consider impact investing?
Well, I think firstly because there are some really good opportunities for solid investment grade opportunities in this space, and some of them are beginning to become of the significant scale that's needed for pension funds to get involved. So actually that's why property is probably at the forefront of that discussion at the moment. Our funds in that area are now around 200 million, which is the kind of scale of investment that many pension funds are looking for. But they're also offering opportunities that perhaps are not coming through mainstream managers. So our residential property funds focus on homelessness, but they also build diversified portfolios of residential property around major UK cities, which is something many institutions are interested to get exposure to.
And as a final question, what would you say to pension funds who are perhaps worried about the impact on their financial returns from impact investing?
I think it's becoming very clear that there is a spectrum of capital which starts with traditional investment and then grades across to philanthropy. And there is a lot of very fruitful areas in the middle of that where good commercial risk-adjusted returns can be generated, but very high impact can also happen. And that's really because these impact investment models are underpinned by a solid economic logic. In this case, a tenant group of hidden homeless who are good tenants, but the private landlords can't really serve effectively. So by partnering with social enterprises, homelessness organisations in this case, they can access that market and investors can back what is a growing market for accommodation in that area.